Welcome to the condensed version of the daily video update. Each day I do a full-length daily video that's about 30 minutes long or so. Well, I know a lot of you are busy, so I also do a condensed version. I just go through the main bullet points of what I talk about, and then I show a few charts that seem to be really telling us something right now. But to get the full story, you really need to watch the full-length video. This is being prepared for Wednesday, July 19th. The first thing that we talk about is what happened in the day's session. The mega caps started out pretty weak, but then ended up finishing strong. That's really what gave support to the indexes later on. The small caps did outperform. They had a good day where they've been lagging as of late. The transports had a strong day. That's another area that we've been watching. They were up 2% and set a new 52-week high. That's encouraging for the overall strength of the market. The S&P did make another 52-week high since we closed higher than yesterday. The positive scenario that the market has latched onto is still continuing. That's the idea that we're going to have a soft landing. That means that even though we're seeing an economic slowdown in lots of areas, we can possibly avoid going into a recession. Also, they're hanging on to the idea that the Fed might be getting close to being done raising interest rates, and the market likes that. Then, looking into the future, the market also thinks that earnings growth will still continue to be positive, and so that's justifying higher prices. But on a short-term basis and even intermediate-term basis, we're quite overbought right now. We've gone up really far, really fast. On the short-term list, we have the CMB Composite, the CCI 14 and 20, the Stochh RSI, Williams Percent R, Standard Deviation, the stochastics, the boom indicator based on 20 periods, and the RSI based on 9 periods. And I go through all of these charts in the full-length video. The same is true for the next section. These are intermediate-term overbought indications. We have the balance of power, the Arun, the rate of change based on 50 periods, our PMO studies, the oscillators, which have been showing some negative divergences, but they do look like they're improving, the Sean Trend Meter, the bullish percent index, or BPI, based on the S&P 500, as well as the BPI for the NASDAQ 100. The percent B indicator, which measures how far are we above or below a Bollinger Band. Well, we're far above that right now. The boom indicator, based on 50 periods, measuring how far away are we from the 50-period moving average. And the RSI 14. The dollar was up slightly after going down pretty severely the last few days, and interest rates were also down for the 10-year. The yield curves that we watch still remain inverted. We're waiting to see if they switch back to being non-inverted, and that's when we usually start a countdown to see if we're going to go into a recession. Sentiment is still extreme positive. We're at 82 where we had been at 80. Our trend is positive and advancing. The green line is on top and turning back up, but we're looking pretty extreme with that indicator. The ADX is above its moving average and both of them are above 20, which is indicating a strong trend. Our bias is positive, and our momentum continues to be positive. The economic reports that came out, we had total retail sales come in up 0.2% month over month. They had expected them to be up 0.5%. Last time they were up 0.5%. If you take out autos, we were up 0.2%. They expected it to be up 0.3%. Last time it was up 0.3%. Total industrial production was down 0.5% month over month. They expected it to be unchanged. Last time it was up 0.5%. Capacity utilization, it's fallen below 80. That means contraction, or not using factories to their fullest extent. It came in at 78.9. They expected it to be at 79.5. Last time it was at 79.4. Business inventories were up 0.2% as expected. Last time they were up 0.1%. The NAHB Housing Market Index came in at 56, exactly what they had expected. Last time it was at 55. Here's the intraday chart showing how we had a positive open. We made our way up to R1, and we actually crawled our way all the way up to R2, eventually breaking above R2 and then seeing a little bit of selling going into the close. When we look at growth versus value, and that's what we want growth. That's when you buy low and sell high. We want growth to be outperforming value. Well, it underperformed in Tuesday's session. We also look at the condition of our trend. The black line is the ADX. That's what we follow the most. It's above its moving average, and it's going up. So that suggests there's a strengthening trend. The green line is on top, so we default to positive, but it's getting above 40, which often can be an extreme positive reading. but we still default to the positive nonetheless. Looking at a daily chart, we're coming up to the underside of this trend line now, which may act as overhead resistance. On a positive side, we closed a little bit above this pivot level. When you look at the bottom, you can see where volume did go up a bit and is actually above average. One area that we've been watching are the transports, and we saw a good solid day. The Dow is also looking a little bit better, where it's finally breaking out above these recent highs. That's being confirmed by the strong move in the transports, where we also broke above this previous high. Another thing that gave support to the S&P is weakness in the utilities. But when we look at our transports to S&P 500 ratio, we only ticked up a little bit. That's because the transports and the S&P were both up. We want to see this ratio going up to give good solid support to the S&P. We also hit an all-time high with the FANG index. This is a longer-term chart going back to the previous all-time high. We were able to get above that and then close above it. Now we want to know, can we continue to go up, or are we going to end up falling back down? Stocks continue to outperform bonds, suggesting that the market thinks anyway that we might be headed for a soft landing. On a longer term scale, we're looking at the weekly version of the S&P 500, where we're just a little bit above this longer term resistance level. Can we stay above that, or are we going to fall back down from that? We're seeing pretty much the same thing with the NASDAQ 100. We're breaking above this resistance level, but it's still a little too early to tell if we're going to be able to stay above that or if we're going to come back down, since this is a weekly chart. When we look at the ratio between the NASDAQ 100 and the Dow, we're getting back to very high levels again, back to where we were at 2000. This was the dot-com boom. Then when we went down, this is the dot-com bust, and it took us 20 years to get back up to this level. We could still go higher than this. This is showing that there's good strength in the market, but we also want to be aware that we've topped out at these levels previously. So what's our outlook for Wednesday? The technicals are positive, but they're overbought. The economic reports coming out will be the weekly MBA Mortgage Applications Index, housing starts and building permits, which often serve as a leading indicator, and then the geopolitical events that we're keeping an eye on. Right now, it's inflation and interest rates for the market. That's the total fixation. Here's the updated economic calendar for the week. And then here's the Stock Traders Almanac statistics for July 19th, where we're neutral to negative with the Dow, where we're neutral to positive with the NASDAQ. Please be aware that we are now in options expiration week. We tend to be up 57.1% of the time, where we're down 42.9% of the time. We're also coming into the 12th trading day of the month. This is the weaker part of the month, so we should be aware of that. Also, we're seeing some weakness possibly coming into the market historically when we look at the NASDAQ. So what about our scenarios? We're not going with the down one right now. We are positive and our charts are pointing up, but we are overbought at the same time. So we're still, though, defaulting to the positive, even though we are overbought. We're not going with the sideways trend right now because our ADX is suggesting that we are in a strong trend. What about the warning signs? The longer term trend signals, those weekly charts, we're dealing with those levels still. Since they're weekly, we won't really know how they end until after Friday. But so far, it's not signaling that we're at a top. We're coming into a seasonally and historically weak time of the month. Our oscillators are still showing some negative divergences, but they are improving. If they keep going up the way they are, it will negate this divergence. The VIX is showing complacency. It's acting kind of strange, so we've been watching the S&P to VIX ratio chart. The cumulative new highs, new lows for the NASDAQ continue to show weakness, even though we saw some improvement on Tuesday. The 3-month yield is still above where it was in 2007, right before the great financial crisis. If we start to fall, is that giving us a warning sign? The S&P growth is in a positive trend, but it's starting to weaken and go a little bit lower overall. Earnings season is here, and that'll depend on how companies report. On the positive side, we have seasonality and setups that remain in the background that apply pretty much to the whole year, and those are still in place. The long-term daily chart for the Special K is positive, but be aware the weekly chart is negative. The long-term equity put-call ratio is positive. It's declining. I know that's counterintuitive, but when it goes down, that tends to be more positive for stocks. The S&P remains above the downtrend channel upper line. That's what we were watching a while back. We're still well above that level. We're still in a risk-on posture where folks are favoring stocks over bonds. Lower price levels may provide support. We haven't really fallen all that much, but so far we can say that support is holding. The S&P is outperforming utilities, which often gives good support to the S&P. The NASDAQ and NASDAQ 100 are breaking out above resistance. Can it stay at that level, or can it continue to go even higher, or will it end up falling back? The Staples to S&P 500 ratio is also declining, which gives good support to the S&P. The small cap index for the Russell 2000 and the mid caps have generated recent golden crosses. But be aware, the S&P small cap index that we look at has not generated a golden cross yet. Small and mid cap growth continue to be positive, especially mid cap growth, and the Copic curve has generated a buy signal. So our conclusion, the S&P remains positive, but it's overbought, and we can say that in the short term and in the intermediate term. In the long term, we're still positive and not necessarily looking overbought at this point. Thank you. I hope you found this helpful. I hope you have a great day, and I will talk to you in the next video.